What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. And today we have a big day over here in the cryptocurrency market. I've got the Ethereum price chart pulled up right here in front of, right here on the screen. You can see that we are pulling up to the 702 Fibonacci retracement level for Ethereum based on the fall that started back there in May, bottoming out here in June and July, and now we're all the way back up here. So that's 702 retracements right there at about $33,580. We're currently at 3,551. So highly intense moment right here for the crypto market with the number 2 altcoin in the market right there at the retracement level. The altcoin market has gotten beyond the 702 Fibonacci retracement, now pushing up here on the 786 Fibonacci retracement. Now, I get asked this nearly every day. Let's go ahead and squash it. I get asked all the time, why am I using standard scale or linear scale Fibonacci retracements over here on a log scale chart? Essentially, I can turn us off of log and put us on linear, and well, here we go. We still are at the exact same place. But if I put us on log and I switch us over to log scale FIBS, well, we're through everything, right? The problem with this is I've gone into detail about this on my YouTube channel multiple times, is that the reactionary levels that happen here when you put this on log scale FIBS are complete garbage. They rarely ever give any type of significant value whatsoever. So I always keep them on standard and never mess with the log scale FIBS. So let's take a look over here at Bitcoin and what's going on over here if we switch over to log scale FIBS. One of the things we've talked about is the fall here, 702 retracement, and then head on into the C leg, right? We've seen this happen many times. We'll compare 3 different situations in which this happened, and we can see we have a perfect 702 Fibonacci retracement nail. Now, what happens if I switch that over here to log scale FIBS? No reactions at all right in there. As a matter of fact, you would have assumed everything was fine, and we got beyond that right there. Head on back. Everything is dandy, perfect nail. So I don't mess with log scale FIBS. We can move on to other situations in which this has occurred at. We'll look at a similar correction that happened for Bitcoin back in September and October. And we can see when we have standard FIBS, even though we're on a log scale chart, standard FIBS, I can take it off log scale. It doesn't change anything. The FIB placements remain exactly the same, regardless if I'm looking at the chart in log scale or not. So long as I'm using standard FIBS, we see a perfect reaction right here at the 702 retracement. However, if I flip us over to FIBS based on log scale, once again, we exceed the Fibonacci retracement again. But if I take that off and just use standard FIBS, we can see that we have a very nice clean reaction here for Bitcoin. Now, this may happen in other markets. I don't know. There may be certain charts that react very well to FIBS that are on log scale, but in cryptocurrencies, I've always had phenomenal luck by just using standard FIBS, regardless of whether or not we are on log scale or not. Really, the only reason I ever use log scale when I'm looking at a chart in the cryptocurrency market or when I'm doing my YouTube videos is it's more aesthetically pleasing. It's easier to see this chart and have a better idea of what's going on rather than looking at it like this, right? Right here, what does this psychologically do to people if you look at something like this? I mean, convinces you it's all popped and it's all over, right? But we know we had something very similar to that happen back in here. If you would have looked at this chart in this same manner, would you have assumed that this thing was completely popped and the gig was up right here for Bitcoin? Definitely. But we know it kept going higher and higher and higher. So it's hard to have perception of the market if you're not looking at it on log scale. So I'm always using log scale when I'm doing my videos, usually when I'm doing my videos, and a lot of times when I'm doing my own stuff. I'm not a big trend line drawer, so for trend lines and stuff like that, I don't know. I'm not a huge believer in trend lines. There's no question there are times where trend lines will work, but for the most part, I see trend lines just get violated, and I think a lot of trend line drawing is just our own psychological behavior and our own psychological wants. And we'll draw trend lines where we want them to be and say, hey, this is what is happening because I'm drawing a trend line and it makes it look like what I want it to look like. But I think if you kind of gave me any type of chart and you presented a bearish trend line, I could draw a bullish trend line on there. Or if you gave me a chart that showed a bullish trend line, I could screw it up and I could draw some bearish trend lines in there to scare you. So I think trend lines are a lot of just our own psychology of what we want to happen and not necessarily that they're really actually super reactionary. But the main thing I'm talking about right now is with FIBS because, well, that's where the market is, but I'll come back to that in just a second. So we just peeked at this one. I showed you that one. I just showed you this one over here. Let's head over to the top of the 2017 bull run for Bitcoin. So I'm on log scale for the chart. I'm on standard fibs. I'm not using log scale fibs. Once again, we can see we get to the 702 retracement and then we end up falling. What happens if I flip these over here to fib levels based on log scale? What do we have happen? Well, we get beyond the fibs and the reversal just shows up somewhere randomly between the 702 and the 786. Nah, I don't like that. And really, if we look at everything that happened in here, there was never a circumstance where any of these log-based fib levels were reactionary at all. And it was when we were using standard scale that the market really told us what happened, right? That we had an ABC correction come in here with a rejection at the 618 fib level and then a big rejection here at the 702 retracement level that headed into a bear market. So I like to use standard fibs regardless if I'm looking at a log scale or not, because it does not change the fibs if I take us off of log scale or on log scale. Doesn't matter. Another thing here is that we've been talking about the total market cap of all of crypto, right? And we keep talking about this level down in here, the rally prior to capitulation, leading us to a 4.236 extension while using Fibonacci's, right? So this was discussed for over a year that this phenomena does occur in the cryptocurrency market. We could see that this is a perfect reaction here. This is a standard fib on a log chart. So I have not swapped this over to log scale to see what it looks like. We're going to figure that out right now to see what happens. Fib levels based on log scale. What occurs here? I don't know. What do we want to call that? I don't know. We clearly get beyond the fibs. We pull back into a level that doesn't seem to have any significance in here. And we're just kind of bouncing around in no man's land in here. If we take it off and we head back to fibs based on log scale and take that off there and go back to standard fibs, what do we see? We see the most unbelievable pinpoint nail. So people ask me all the time, why am I using standard Fibonacci's on log scale charts? And the reason is because if I take us off of log scale, it doesn't change anything. The fibs will stay exactly where they are no matter what I do. And I have not found circumstances that are reliable in the cryptocurrency market to justify swapping over here to fib levels based on log scale. So the only reason I'm bringing this up is because we're going to be talking about fibs today, like we've been talking about for the last couple of weeks, because of Ethereum now getting right there at that level, the crypto market getting right there at that level. And I get asked this every single day. Every day. If you're sitting here and you're like one of the people who asked me and you're thinking, oh my gosh, he saw my message or he heard me. Nope, it wasn't you. It was the hundreds of other people that say it too. So clearly, I think there's some place where people are getting information that everybody is supposed to be using log scale fibs. If you did your own charting, if you really just actually sat down and did your own charting based on fibs, and enough of it and did it on many different charts, you would figure it out on your own to not use these log scale fibs, regardless of if you're using a linear or a log scale chart. It's that the cryptocurrency market reacts with insane precision to standard scale fibs, not log scale fibs. And so for that, we are looking at Ethereum right now as it's getting up to the 702 Fibonacci retracement level today. The total market cap of all of crypto battling right here in between the 702 and the 786. I'll flip this over to log scale to please people and let them see what's going on. In this circumstance, if we had this Fibonacci sequence set up right here with log scale, you can see we're beyond all of them, but that we've been beyond them before. I'm not really in that belief. I do believe we're just sitting here, just meandering around in between the very top ones, just like we are with Ethereum, and while the total altcoin market cap getting right up to the very last one. But here's the thing that I'm noticing happening right here as we're at these retracement levels, right? So why am I not hooting and hollering and jumping and screaming by seeing the total market cap or the altcoin market getting beyond that retracement level? even if it got beyond the 786, there's something that's just kind of missing here. And that's that when we typically see a break from this, you see a conviction break. You see something with volume, you see the explosion out of this price level. We're just meandering in here right now. So I'm not seeing anything that's like, hey, boom, we're going. It's just kind of teasing around in here right now. And even when we look at XRP from back in 2017, I'll show you that here in a minute, we saw stuff like this happen. Like, we just kind of came in here. But then what really started occurring was this consolidation underneath here. And then there's a big explosion. And that's the thing that we're missing here. While we are through the retracement levels, there just doesn't seem to be anything happening here that looks like an explosion to me. Maybe volume will come in shortly and that's going to just propel it through it all, but I don't see that yet. For example, here's XRP back in 2017, and we could see that it did get through most of the retracement levels. It did get up to the very last one nearly, then mess around in here. And then it was once there was like this conviction breakthrough that gave the market what it wanted to know that it was going to continue going on to higher price levels and go have price discovery. That's also what happened for XRP back in November of 2020. Anybody who was here during the whole like 90 to 120 days of 22.5 cents, those glorious times that we all went through, we can see how we were battling around here in the Fibonacci retracements. But it was once there was this conviction breakthrough, the market was able to keep going and going. That exact same thing happened between February and April here in 2021 for XRP. We could see how we retraced back up to the 702 retracement, pulled back, meandered around in here. But the second there was like this conviction break, boom, that sent the market flying to the upside. So as Ethereum is right underneath it and the total market cap is meandering around inside of these retracement levels, I stay on high alert, right? But that's just something from years of experience of seeing these types of structures play out so many times. Everybody's going to have their own conviction of, are we clear? Are we not clear? For me, we're not clear yet. If you were looking at this on log scale, right, log scale fibs right now, you're sitting here screaming, we're all clear, we're all clear, we're flying, everything is good to go. I don't operate like that right now. I'm still in the concerned category as we are still in the retracement levels. And the thing that we're seeing happening in the market is we're seeing the total market cap, the total altcoin market cap, Ethereum, a lot of these coins getting back to those retracement levels. And we can see that Bitcoin is still being held down by this price level, the price level that was the support. Then it held for support again. But when it was the clear break of this, that's when the market lost its cool, right? Then now here we are back at that price level and haven't been able to clear back above it. And as we know, based on that most recent fall, it has pinpoint nailed a 702 Fibonacci retracement. It has not nailed a full retracement based on the entire fall. And my bet is that this is nothing more than an ABC correction and that this market will set new highs. I don't think it's going to go significantly higher than what we've already seen, but it will set new highs in my opinion. But if that's wrong, we're in the most dangerous place you can possibly be for the whole market right now. You have Bitcoin stuck underneath the price level that it broke down from. You have the total market cap and the total altcoin market cap stuck at the Fibonacci retracement levels, and you have Ethereum today reaching out to the most reactionary Fibonacci retracement level that the cryptocurrency market reacts to. So what do we want to see? We want to see Bitcoin break up. We want to see Ethereum break up. We want to see the leaders keep going. And right now, as we're right here, it is super stressful. Because like I just showed you in the examples for the fib scales based on linear or log, this is where this market can react and turn to the downside. Now, I've presented 100 different cases on why I don't think that's going to happen, really based on everything we talked about during the depressing time period we went through in May, June, and July. I do think the market's going to break up, but I can't celebrate that idea of being correct until we get beyond retracement levels. Have we done everything that was expected up until this point? Yep, it has played out precisely as expected up until this point. It's been absolutely incredible. But if you notice, I haven't sat here and say, yeah, I nailed it, I was right. Haven't done any of that yet because I don't get proven right until it sets new all-time highs. And I know that the most dangerous place on the chart is where we're at right now. This is where nightmares can begin or where dreams can come true. But like I've mentioned many times, there's one key element of this market that is missing that has showed up in each of the previous bull runs, and that's XRP setting new all-time highs and going absolutely nuts. That has consistently been the mark of the end of the bull run. Or even if Bitcoin isn't going to set new all-time highs and it's just going to retrace, XRP's explosive rise has marked the end of the retrace for bull runs for Bitcoin as well. And that is missing here. We have frequently talked about how this is very much of a rotating market. There may be some coins that aren't going to be setting extremely new highs. There's some stuff that has gone on massive bull runs already. I don't touch that stuff. Ethereum, Bitcoin, massive, huge bull runs. I've already 65% exited those things. Same thing goes for Cardano. I'm 65% exited. If it goes higher, I'll exit even more of it. But my exposure to those ones that are really high up is much lower than what my exposure is to the ones that are still really low. And that, again, is just based on my experiences of this market, that there are certain elements that have marked the very end of the bull run, and those elements still haven't shown up yet with some of these lagging altcoins that have not gone skyrocketing yet. And so in 2017, what did Bitcoin do? Bitcoin retraced back to the 618. I just showed it to you. Then it went on to have another leg. So what was this? This was ended up being an A, B, C. And then it was during this whole time period right in here where everything went absolutely crazy and the mark of the top was right in there. Are we still just doing that for Bitcoin? That still is certainly in the cards while it's below the 618 Fibonacci retracement. Maybe it's going to go on to do a B leg, then onto a C leg. That's possible because there are elements of the market that are still missing, but you just can't convince me that it's all over without this guy, XRP, not having a big fat green line on it. Nah, I don't know when do I. There should be people who look at that and say, he did it, he did it. And my daughter has been asking about the big green line for too many years at this point for it to not come true. Daddy, do you have the big green line today? No, not yet. Oh man, it just keeps teasing us. I know. That's been going on for years. But we know that the cards are all set up for XRP for the potential for a lot of good news to come down the pike. And we know that the mark of the end of the bull run has always been XRP skyrocketing. So we're not there yet. So while it is nerve-wracking being there at those retracement levels, there's things in the market that aren't happening yet that typically happen when it's the end. And I'm sure many of you have seen this before, the Wall Street cheat sheet, the psychology of a market cycle. And essentially what happens, what we're talking about with Bitcoin going back into that 702 Fibonacci retracement, is that we have euphoria, then you have a big crash, and then you have a retrace, and then it really goes off into a bear market. The certain elements of the psychology of the market or the sentiment of the market were not there in this time period like we have seen before, what I've been through before when the bubble really did pop. When the bubble really did pop back in 2017 and 2018, everybody was just convinced buy the dip, buy the dip. This is just what happens. We've all been through this before. We know to buy the dip. And as we went into the retracement levels, there was no worry. There was no fear. Everyone was complacent that this was okay, that this is just what happens. We're all about to go off into the next run. But we don't have that right now. The market participants got utterly terrified during this dip. A lot of people walked away. They sold off their bags. You can see that by the on-chain data. There's a lot of great guys out there sharing that stuff. This guy over here on Twitter, TXMC Trades, he gives a ton of on-chain data. It shows it that retail investors sold it and walked away. And that's not what happens during those time periods when that complacency happens. It's that people become euphoric all over again into the retracement. And we just don't see that euphoria happening in the market right now. And I can clearly remember what that moment was like back in 2018 as the market was going into that retracement. You were called a FUD starter. You were called the worst person in the entire world if you issued any type of warnings at retracement levels. We don't have that right now. We have people who are still massively worried right now. And for that makes me happy. I'm happy to see that the market is not euphoric right now because that would be very, very concerning. So, what do we have going on? We've talked about this in depth and in detail with the total market cap rally prior to capitulation to a 4.236 extension. And the examples we have from the past, this thing does break up. That's optimistic. We have the total market cap with the double tap back test on top of the all-time high, pulling back into the bull flag with a V bottom out of here. People thought I was probably pretty nuts with that. At one point, I thought I was pretty nuts with it, but it is playing out just like that with a nice V bottom coming out of here. We have a list of leaders that have led the way to set new all-time highs, and that total altcoin market cap is sitting right above that 702 Fibonacci retracement level. We also have the examples that we've looked at from the past, like with XRP, with our big fall that happened here back in 2017 in the spring or April of 2017, the big fall. We have two bounces sideways and then our capitulation without setting a new low that ended up going right back up into the retracement levels. And what happened? Big breakout. That's also precisely what happened with IOTA, with the big fall, then the two bounces sideways, capitulation, not setting a new low, back up into the retracement levels, and then what ended up happening? Big old breakout to the upside. And that is exactly what has happened over here on the total market cap of crypto and the altcoin market. Big fall, two bounces, sideways, capitulation without setting a new low, right back up into the retracement levels. So all these things are super optimistic right now, but we know there is still more up ahead of us. We know that the total market cap, including Bitcoin, is still below. We have Ethereum still below, and we have Bitcoin still below. So there's still work to do right now. And while we've expected all of these things to play out the way that they did and held on strong through all of it, we know we're at that big moment right now of proving it all right or proving it all wrong. So I'm cheering big time to break through the retracement levels. And if we do break through all the retracement levels, I would assume that all-time highs will get broken in no time. But we've got to get through. And as I wrap this thing up, Ethereum is right there. And Ethereum has historically given a lot of signal to the rest of the market. So for the rest of today, all eyes on this and fingers crossed, and I'm crossing both of them right now and you can't even see it, we break through. But all right, guys, I'm going to go ahead and wrap this thing up. I hope that you're doing well out there. I appreciate you so much for watching my videos and watching my channel. If you're looking for something to do, you could check out my website over here. This is bcbacker.com. This is my course where I deep dive into the previous Bitcoin bull runs, the different altcoin market cycles. I tie them all together to show how the market has historically worked in the past. I talk a lot about mathematics and percentages, and I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro so you can do your own charting. I talk about my personal exit plans in here, and like I mentioned in yesterday's video, I did just recently include a new market update. So I posted a market update on there yesterday, August 31st, that is available to anybody who is enrolled in the course and anybody who newly enrolls in the course. And you can check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker, and I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. Hopefully I go live soon. I've been waiting for us to get to these retracement levels. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.